Hello and welcome to ATFX's US CPI data preview. My name's Nick Twidale. I'm the Chief Market Analyst. And as always, please subscribe to our channel and you'll get all the updates from us here at ATFX. Right, well, it should be a huge night in the New York session today. CPI data is the final piece of the puzzle for the Fed. In a week's time, we're anticipating seeing them cutting rates by 25 basis points. But if today's data comes out significantly different from expectation, then that could really change things and could see markets off to the races today. We're unlikely to see too much in the way of moves in the next couple of sessions. So that's through the Asian session and the European session. But once New York open, there's a couple of things going on today that could really see some big moves. And this US CPI data is key for moves in the dollar. First of all, looking at that CPI data, expectations, nice and easy to remember this time. I don't even have to look at my screen over there. The CPI headline number month on month, expecting a 0.3% increase. The core CPI at month on month, also 0.3%. And I will glance over for that year on year if it's 2.7%. Expectation. Any differentials from those, and it can with this number because it is so important and crucial, just be like 0.1, 0.2 of a percent, could see some big moves, especially with some of the majors sitting at very, very vulnerable levels. A lot of traders will be looking and hoping for a bit of a higher print in the CPI that will really pull in expectations of that rate cut. So I think we're looking about 80%, over 80% of the market expecting, or 80% chance of a 25 basis point cut. If this CPI number comes out stronger, it could give the Fed pause to think a little bit more. And those expectations, I think, will come back in and close to that 50% level. That should see the dollar take off. This is the Aussie chart. If we get a stronger print from the CPI, as you can see, Aussie has come off, and it's come off quite hard over the last couple of months, in line with that dollar strength. But also yesterday we got a slightly more dovish tilt from the RBA, and it's taken us down to these lows, which are now kind of on annual lows. This is the target that we've got very close to us, just around 63.50. And then you've got these multi-year lows, the October lows, only over here, down around sort of the 62.70 level. If we get a stronger print from the CPI today, the opportunity for this to break into a fresh range, and because we'd be hitting new levels, take us under 63.50, it opens the way for stronger moves to the downside. Now, there's a couple of other currencies that are also sitting in very, very good positions for trading. The other one I'm going to focus on, I'm going to go, and I don't normally go straight to this one, dollar CAD. Now, CAD has had a magnificent move as well. And today's CPI data is going to be crucial for dollar CAD traders because an hour and a quarter after the CPI data comes out, the Bank of Canada are coming out and they're expected to cut rates by 50 basis points. If they do that, that should lend some pressure on the loonie, topside move on the dollar CAD. So once again, it's another one that it breaks these highs. There's nothing really to stop it attacking these highs that we saw 4 years ago in Q1 2020, and that's all the way up there, as you can see. Around about 146.70. So plenty of opportunities there. Can't miss out with the majors. So Euro, probably less precarious, but also like another big mover. Stronger print will take us down to challenge these recent lows that we've got around 103.30-ish. We've got to take into account the weaker print as well. A weaker print should see some appreciation in the euro. Looking for it to top out around about that 200-day moving average, around about 108.40. Up top. These are daily charts we're looking at. We're looking at the longer term effect of this up to 112. I can't see 112 coming anytime in the near future. And I think the real risk is that we get that stronger print in this US number. Let's move across to our favorite currency for volatility. Here's dollar yen. It's also not sitting at too precarious a position, but it is near some technical levels, not too far off that 200-day moving average on the dailies. Stronger print, again, would risk a break of that 200-day, a break of this high, and move us back up towards those 154, 155 levels. Weaker print will take us down to challenge those recent lows underneath 150. So plenty of trading opportunities out there today. It will be, without doubt, this CPI number, it is the biggest data print of the week. I'm calling, if we get anywhere near 0.5 or above, expect the dollar to really fly. Even a 0.4, we're going to see a strong appreciation in the dollar. Conversely, of course, anything beneath that that 0.3 expectation. 0.2, yeah, I think we'll see a little bit of a sell-off, and it will lock in that Fed rate cut of 25 basis points. Anything much lower, then we will see some contraction in that dollar appreciation that we've seen so much over the last few weeks. So fantastic trading opportunities out there, plenty of opportunities in the majors. It is a very big tradable data release. And don't forget that dollar CAD one. That could go both ways as well, because you've got the US influence coming in early, and you've got the Canadian influence coming in an hour and a quarter later. But plenty of trading opportunities in the majors. I think we're going to see some big volatility later today. Thanks very much for listening. As always, if you need anything from us at ATFX, please do let us know. Thank you very much.